You're listening to the right episode. If you wanted to hear a friend of mine who's closing 30+% of his business as refinances in today's market, how do you crush it in today's market with refinances? I'm your host, Steve Kiles. You're listening to the Loan Officer Leadership Podcast. We are powered by the Mortgage Marketing Animals, and you're in for a treat. I got to tell you, Greg Morga, what's up, my man? How are you?
What's up, man? Hanging in there, man. Just a beautiful Tuesday, you know?
Bro,
More deals,
I got to
more
tell you,
problems.
I love for those of you watching on YouTube, I love seeing Greg's face. He is the best hugger in the world, man. We met a couple years ago, and let me just give our listeners, you've been on the podcast. It's been a long time.
Yeah.
And I think what I did was I put your Freedom Club story on the podcast a couple years ago, but you actually spoke at Freedom Club. And let me just tell our listeners about Greg. He's in the New Jersey market, very remarkable, got in the business. First full year was 2019, right? And by your third year in the business, had W-2 netted to himself $1 million. And last year came just short of $1 million. But I mean, hey, every $950,000 helps. And I love Greg because he's so humble. He is an implementer, and he is defying the odds. We saw each other just a couple of weeks ago at our Freedom Club event in the Carolinas, had so much fun there. And I asked you, man, how's the refi business? And you said, Steve, I'm killing it. So listeners, listen to this. Last month, 30% of his $4.2 million in business came from refis. This month, he's funding 6 million, 19 units. 6 of them, 31% are refinances. And Greg, I keep hearing people say, how do you do refis in a 7% rate? So my man, what's up? Prove them wrong, man. Talk to
Yeah.
us.
I mean, well, here's the thing. Like, the first thing I'd say is like that last sentence you said, if you're going to talk about rate, you're not going to get refinances, right? Because there's no reason to do any sort of refinance for rate purposes, right? I would say that, I just a year and a half ago, everyone says find your niche, find your niche, find your niche. And what I really like doing is I like helping people change their lives for the better. Whether it's paying off debt, fixing up their homes, buying an investment property, creating some sort of wealth for them. So I would say that the first thing that really started getting me into refinances a little bit more in the last 18 months was that I kind of just promoted myself like that to people when I met them, realtors, contractors alike. So they think of me as that guy. Hey, I heard that you do a DSCR loan. I heard that you do cash out refinances. This guy needs to pay off his debt. Can you help him? You just put it out there. It's like a magnet for anything else. There's a lot of people that specialize in VA loans, right? They're going to attract more VA business. If someone says I'm the renovation loan specialist, they're going to be the renovation loan guy. Well, I'm the debt consolidation guy.
Dude, I
So,
love it.
yeah. So, and, there's so many reasons to use your equity. We really do have a gold mine in equity right now in people's homes. That's what you're not hearing on in the media. You're hearing rates are going up, there's a bubble,
Yeah.
people can't afford it. And that's all very true. It is very hard affordability wise. There is no inventory. Rates are really, really high. But what they're not remembering or not wanting to remember is that equity went up 20 to 30% for most people in the last 3-4 years in their homes. And they have a way to better their life.
Hey, Greg, you know what? Hey, listen, because I was working on talking points because so many of our agents, all you hear is the negative news. But Greg, I was reading this last week, and literally one of the stats is the average homeowner in America right now has $274,000 of equity in their home. And the average family is carrying about $96,000 in consumer debt.
Not surprising. I mean, and Steve, you see it too, man. I mean, the average credit score that I'm seeing when I run credit now is way lower than it was in 2021, 2020,
Yeah.
even the beginning of 2022. So I'll just tell you a little bit about how there's just a lot more refinances on my side than you would expect. Number one, every single person that calls me doesn't call for a refinance. Sometimes they're calling about a home equity line, right? And depending on the person, depending on the situation, there's a lot of people that just simply can't get a home equity line because of their credit, but can get a cash out refinance. There's also people that can get a home equity line of credit, but once they really learn how a home equity line works between the repayment period and the borrowing period and the adjustable rate, and what rates really are on a second lien versus a first lien. And most people are trying to take out a lump of cash, not use it like a credit card. Really, the cash out refinance makes more sense for a lot more borrowers than you would expect. So I have a lot of conversions from a home equity line of credit to a cash out refinances too, as well. I'll tell you one thing that I've been doing that got me a couple of refis in the last 45 days. So, we always talk about the DSP, right? You call your realtor. So I actually twisted it a little bit. So I tried for 2 weeks. I just started, but for 2 weeks, instead of calling realtors on Mondays, I actually started calling divorce attorneys. And the reason why I started calling divorce attorneys is because I don't think there's a lot of lenders doing that really consistently. So I said, if I can get more appointments with divorce attorneys, then maybe I could just target them as being their divorce equity buyout lender. So that's exactly what I did. I had a meeting last Monday with a divorce attorney, and I said to him, I don't want to be your lender for purchases. I know that you work with other lenders. I know you got to give your business out. I just want you to give me your divorce equity buyouts, even if it's going to be a year out, just because then I'm in a different bucket. I'm in a different area. I'm going to send you purchase deals. I'm going to connect you with realtors. I just want to get your divorce equity buyout. So I started doing that. I've met with 4 attorneys in person. I didn't call as many that you would call realtor side because there's just not that many that pick up their phone, especially on a Monday morning. But I got 3 appointments, and I already got 2 divorces in the last 2 weeks. One's closing in September. The other one, we don't know when it's closing. But again, 2 more refinance opportunities. It's not about rate. It's about the situation. And I'm just a mechanism to get something that they need done. And I think that's another direction that you can go to get more cash outs. You don't want the cash out's not the solution. It could be the mechanism. So divorce buyouts, you're the mechanism. If you are trying to fix up your home and you don't have the cash, I'm providing that mechanism to get you your money to fix up your home. If you're trying to buy an investment property and you don't have the cash, a cash out refinance is the mechanism to buy you that investment property. That's when realtors come in. Realtors come in because they have investors, and you say, oh man, they can't get their offer accepted. Well, what if they were a cash buyer? Got 2 of those yesterday. 2, I'm doing cash out refinances because there's a lot of people in Jersey moving from up north down to the shore where I am at, and they've owned their homes in Bergen County for 30 plus years. They have no debt at all. And the rates are lower on a primary mortgage than it is on a secondary purchase. So you simply just tell them the difference in the principal and interest payment, and they go, okay, that makes total sense. And then they're a cash buyer where they could save 5% maybe off the purchase price because they're cash, because the sellers are willing to take it because there's no appraisal contingency. So I'm just throwing, I know I'm throwing ideas out there like rapid fire, but the whole idea is that you got to think in a different context than you would for a purchase or rate and term refinance. It's thinking outside the box and using their home as a vehicle to get their life goals done. That changes the conversation. Now it's not about a mortgage. It's not about a rate. It's about how do I get A from B? And I always say to people, if you took out the word mortgage and you took out the word interest rate, if I told you I could give you this amount of money for this amount per month and you could get A, B, and C done, would you do it? And they say, yeah. And that's how you can get a lot of people to stop worrying so much about that. Obviously, they got to worry from an affordability issue, but that's why we have debt to income ratios. That's why we have our systems of underwriting to get them insured by Fannie, Freddie, and FHA in the first place.
Hey, and Greg, you're so smart. I love your thought process. You've said a couple of, no, I mean,
Tell my wife that, please.
I will tell her to get over here. I'll tell her how smart you are. Hey, but I love it. Like you're saying things like it's a mechanism. And I love that. Divorce, buyout, fix up the home, buy the next investment property. Those are, because you know what that does? I hear it all the time. It's all about the rate and fees. Nope. It's about the positioning of the money and what they need the money for. And I love you said this. You said your home is a vehicle. Dude, what a great analogy, because it really is. If I could give you this money and it was in this monthly payment, would you take the money to get that result? And you've now flipped the whole conversation from rate and fees to Your mortgage is a vehicle to obtain the life of freedom you're looking for. And brother, no wonder you're at 30% refi, because your whole mindset is not who would because I've heard it all the time. Who would refi at 7%? People that understand money's a vehicle, people that understand home equity is a vehicle, people that understand a refinance is a tool to achieve a life of freedom. So let's use it. Man, what a great, hey, somebody's listening today. You've already gotten the nuggets. I've heard so many things. You're talking about it constantly. Do you mail that to your database? Are you mailing monthly? Like, what are some of your mailers look like?
So I just started a Facebook campaign.
Yeah.
The first funding goes out Monday. We actually use ChatGPT. We created a workbook with ChatGPT on like how to look into refinancing and what are your goals. And you know,
Wow.
I made some bomb videos about exploring
Yeah.
it, and we're literally just trying to get appointments,
Yeah.
right? Some of the subjects we're targeting is the student loan, the student loans coming back October 1st, right?
Yeah. Yeah.
Debt consolidation, investment properties, stuff of that nature. Because again, we're not trying to sell the product, we're trying to sell a life goal, right? And one little thing that I want to tell you too is that a very, very important thing is, so I was a nerd in college. I studied like legal theory and all this thing. And there was a thing called the framework of the conversation. And the framework of the conversation really dictates how your sales are going to go. Okay. So the framework of the conversation with the refinances, again, is not about the factors that we think of a typical mortgage, the rate, the payments, the closing costs. It's about getting a goal done and using this to get it done. Another thing I'll tell you too is that shopping doesn't happen as much with these kind of deals because the borrower, the client, wants to feel comfortable that you're really an expert because you're talking about them investing or paying off debt or financial things. Now, I explain to people I'm not an accountant, I'm not a financial advisor. I have people that are if you want to talk to them, but it's a different concept than, hey, I'm buying this house. I'm already sold on the concept of buying a house, but I want to save the most money. That's not what this is. This is Greg told me something that really has value, and I don't want to mess with that because what if somebody else doesn't understand what I'm trying to do? What if somebody else tells me something wrong? So once you have expert knowledge of these kind of things and how they can help their lives, you have to study it, you have to live it, you have to breathe it. People are going to trust you, and your conversion is going to be so much higher on these type of transactions because it's a different conversation. It's in a whole other building than the typical purchase or rate term refinances, and it makes it more fun, So that's about it on that part.
Dude, I love it. Well, hey, let me ask you a question. What do you wish you would have known 18 months ago? So if you were looking back as you started really, because I remember you were pivoting and I was like, man, this is going to be great to see. And I said, well, we're going to talk when you have some big results. And what do you wish you would have known 18 months ago, getting started, really pivoting and positioning into the refinance game, while carrying a healthy purchase money business as well? What do you wish you would have known?
I wish I would have known how easy it is to get referral partners from contractors and attorneys and financial advisors. I wish I would have known how easy it was.
Talk about it.
Well, so attorneys and financial advisors and contractors, they have a lot more transactions that take place that aren't market dependent, right? Financial advisor is going to have a client whether the market's doing well or the market's doing bad. A contractor, there's always going to be someone that wants to get something done on their house. A divorce attorney, unfortunately, divorces are at an all-time high. So because the rates are 2% or the rates are 7% or because there's an inventory crisis, it doesn't really matter.
Yeah.
So what I mean by that is even if you have an attorney that has a couple of lenders that they're already working with, they have enough business to give you. Yeah. And they also need realtor business. And they also need, mortgage business. So you give them business, they're going to give it back to you. Financial advisors, the same thing. They see you as a vehicle for them to make money, especially if they have home equity to play with. And contractors, you could be the difference of, giving them 33% more conversion in their quotes because they could say, hey, I know that the one thing that's stopping you is not having the money to purchase it. You thought it was going to be a lot less, but I have a guy, you could potentially get that money in. So I would just say that, I think that it's really, really healthy so that people don't get market dependent to really have an equilibrium on purchase and refinance.
I love that. Yeah.
because I'm still doing a lot of purchase. I do a lot more purchase still than refinances, but I can tell you that I have a lot more refinances than most right now. So I have both. And that's why, even though this market's tough and there's a lot of margin compression and things are definitely more expensive and making less money, I'm making it up on the quantity of loans because I went for it both. So I would just say I would rather have done that earlier in my career, but I don't regret it. I just move forward.
Yeah. Dude, I love it. And we always talk about a balanced pipeline, 70% purchase, 30% refi. And
Yeah.
you are living proof that if you'll build both legs of marketing, following the DSP on the purchase, and I love the strategy. You've got a strategy to be strategic. I'm going to get refinance business in today's market. And it's where we make a huge impact in the lives of the families we serve, man. When they get that money, you've made a difference in their life, and that's huge.
Mhm.
And so, brother, I absolutely love it. Great thoughts. You have any, give us some closing thoughts.
So what I would say is, closing thoughts would be, if I was to give advice to somebody, okay, and it's not just about refinances, but in general, I would say don't be an echo chamber right now. And what I mean by that is there's a lot of media out there and there's a lot of common thought on how the market is going, right? But clients, if you want to get relationship business right now, which is what we are, right? You have to have your own beliefs. You have to truly believe in them. You can't spit out the same information that everybody else is. It doesn't mean you lie. It doesn't mean you alter the truth. It means you believe in your perspective and you back it up with knowledge. That's what makes you successful in these type of industries. I believe that the next 18 months, I've been saying it since last year, I believe this is the biggest opportunity in this industry to really spark your business for the future that you might ever see again, because it's hard. So when you're an expert, that's your value add. When you show people, not just tell them that there's a reason to buy or refinance, but you actually show them with proof that wasn't from, sources that everybody else pays for, it's from your own brain, that's your value add. And then you're not talking about programs. You're not talking about it, right? You're talking about, why am I listening to this person as my expert? And you will attract more business from realtors that are struggling, clients that feel like they have no way out, and referral sources from those two people that remember that you changed the outcome of their transaction. So I would leave you with that. Don't be an echo chamber. Believe in yourself and put action to it.
Dude, I love it. Man, you always inspire me, Greg. Dude, I love it. And I love it when we get to hang out face to face. I always love to hear what you have to say. You're such a great tacticianer. Even from your thoughtfulness about the framework of the conversation, and I love don't be an echo chamber. The reality is this: we get the opportunity to serve in one of the greatest industries, in my opinion, in the entire world. And we get to help families who have equity get out of debt and put them in a place or a better position in a life of freedom. And so I love how you're positioning your refis to be a big part, 30% of your business, man. I love it. So if you're listening today, be encouraged. There is a ton of refi market. You just have to be strategic with it. Keep your DSP running, keep your sales activity running, and then add this other leg. Like I was even thinking, man, you could do some mailers. I love the Facebook ads. I love what you're doing in that genre as well. It's very, very inexpensive to do targeted Facebook ads to past clients, to agent partners. And so, Greg, thank you, man. You're always an inspiration. I love having you on the podcast. I'm grateful for your friendship, and thank you for just sharing what it is you're doing to have big success.
Always a pleasure, man. Always an honor.
All right. Hey, well, if you're listening today and you want to learn more about the Daily Success Plan and how you too can see big success and results in your business, go to freedomplanningcall.com, freedomplanningcall.com. We'd love to invest 45 minutes to help you build a clear plan and strategy in order to have big success today. And so I know you heard Greg talk about, he's even spoken at the Freedom Club events. I mean, they're so powerful, such a great way to spend time with other people who are having great success in the market. freedomplanningcall.com. And remember this, anything worth doing is worth doing badly. Just get started. See ya.